Hey everyone, I hope you're doing well. I wanted to make an update on my stash. I'm gonna try to keep up with it on a weekly basis, just to keep going or to keep up with what's going on. And I'm able to throw this up on the computer now, try to make it easier. I think the cell phone videos are getting tired and getting played out, so we'll try to change it up. But my internet titans is above 12%, so it's back above double digits and the higher double digits that it's been throughout this year. This is around the highest I've seen it so far, so it's kind of touched around 11 or 12 at some points in my videos. I've shown that, but this is back up. So for a while we had like a big sell-off, and I think a lot of that was due to Amazon hitting 1,000. I think Google's hitting 1,000. People are scared that we're in the tech bubble, which we clearly are. But I mean, when that bubble pops, everybody has their speculation on it. But in the meantime, tech stocks make money, like good money. So I think it's going to go up a little higher before anything crazy happens. Um, Crazy like Amazon buying Whole Foods, and now Whole Foods is like like I don't shop at Whole Foods. Like I would like to. There are some things there that are pretty good that I've had, but the prices is something always people complain about. But now you have Amazon, who's like the king of reducing prices, reducing shipping rates to pretty much zero, and then you just pay for that, and they're gonna help bring down prices, and you can have it delivered to your door. So that's gonna be pretty sweet. So I'm looking forward to that. Defending America above 10%. Now, of course, the perpetual kind of arms race that we're in, you could say, selling and making trade deals. I think Lockheed Martin was they were talking about like a $37 billion F-35 deal or something like that, just ridiculous amounts of money. But that just keeps building to this ETF. I mean, selling weapons is what America's good at, Like let's keep it real. Those stocks in that ETF do other things, but the majority of their wealth comes from defense and making weapons. So we should say offense. But anyway, live long and prosper. My health stocks. So basically, when they keep talking about the healthcare bill getting repealed, the ACA, Affordable Care Act, or as what most people don't realize, Obamacare, and I think there's still people that don't understand the exact same thing. But and they want to redo a deal with or remake the AHCA, the American Healthcare Act. Uh, Dumb names, but anyway, they want to try another pitch at. I think they're going to do next Thursday, and they're going to try to let the CBO score this time instead of trying to shove it down people's throat like they did last time, and hopefully get a good score. And if they get just enough of a good score, just a smidge better than what the other one is, they're going to be raining on that all day, like, oh, it's better, blah blah blah. Instead of 23 million people getting kicked off, only 20 million get kicked off, or so on and so forth. But anyway, the closer and closer that gets to being repealed, the more and more this goes up. So making money on that. Money machines, my bank stocks, pretty much every time Dodd-Frank keeps getting talked about getting repealed, this keeps playing the market, so it's going to keep going up. The closer and closer, redoing the Paul Ryan and redoing his whole budget, his whole plan, and everything like that. I mean, that dude's got an agenda. I mean, let's keep it real, but bank stocks are banking on that guy, no pun intended, to do his job and do it well, and that's to fucking keep interest rates low, so it's cheaper for big companies to borrow, but it's more costly for us as a whole to live because our economy suffers. We need to pay down a shit ton of debt, and low interest rates isn't helping. Raw Earth, which is my oil stocks. Commodities are tough. Investing in commodities are tough. And oil is probably like the toughest of them all because oil drives the economy, especially the American economy. Without oil, you couldn't drive your car to a job. And most people like that live in the Bay Area like me, you don't, or not anymore, but you live far from where you work. You might have to drive an hour just to get there. Some even in the same city, like so parts of the Bay Area, some of the cities, it takes an hour just to get across town, let alone to another city. So it's ridiculous. But everything runs on oil and it's needed. So until we find a better way, which we have better ways, we just don't want to invest in them, like solar, wind, renewable energy, geothermal, so on and so forth. If we over time, steadily switch to that, we'll have better, cheaper ways. But until then, it's oil all the way. But there is things going on in Qatar that and I haven't been following that much because I'm gonna be honest, it's kind of boring to me, just a little bit. But since I invest in oil, I need to take a more um, or I need to take a deeper look into it, basically, just to fully understand what's going on, because it is causing some fluctuation in oil and production. I think Iran just had their sanctions taken off, so they weren't at their highest capacity for selling oil and everything, or building up their stock. So they're going to try to get back into that, so that could fluctuate prices some more. I really got to get more on oil, man. It's such a hard commodity. Wireless Wonder has been just been sucking. But I think the closer we get to the FCC ruling where net neutrality is going to get gutted and killed, I think that's what's going to drive these stocks up. Because you see the biggest ones in here are AT&T and Verizon, or those are internet carriers, and they're basically going to say, oh, you like Netflix? Everybody likes Netflix, so we're going to charge a premium for Netflix to stream their stuff so you get it faster. Which you might be like, cool, I get my Netflix instant streaming. There's no lag whatsoever. But then what about smaller companies that do streaming, like I don't know, like Hulu that tries to make movies, or even Amazon that makes their own movies? They're like, oh, you're not paying us as much as Netflix is, so we're going to stream your movies slower. We're going to make you wait for that buffering. We're going to interrupt the center of your fucking movie right when it gets to that good part where all the action's happening. When it go, boom, buffer, they're going to fuck with you like that. So I personally am totally, if it's not obvious, totally against that FCC if they kill net neutrality. But let's keep it real. I don't control all that. I'm just a regular guy, so I'm investing in what I think is going to benefit. Ultimately, it's these companies right here, like T-Mobile, Verizon, and all that, that are going to be charging these companies ridiculous sums of money just so they can have like quick streaming. It's like they're basically paying for the carpool lane while the other companies got to be stuck in traffic. They don't get the express lane. They're paying to go on the freeway while everyone else has to take side streets to try to get to work. They're paying for all the green lights to hit every one of them to blow past them all while everyone else gets stuck at red light after red light after red light. Trying to get to where they're trying to go. That's what the FCC is doing. But if it goes through and it turns around, I think this ETF is going to benefit. But until then, it's been killing me. It's down 8%. I'm only real laggard. So I'm at 5.4% in my portfolio, just kind of with that. But what I wanted to show is on FDN, just this tech rally. Because like I said, I kind of, I won't say like I alerted full on, but I kind of talked about a double dip buy opportunity because Bitcoin has been going down, as well as tech stocks, which I found kind of interesting. But if you see, I put this horizontal line on this graph, kind of around here is about when I was talking about this double dip situation. Now, these candlesticks, I'm going to try to make more videos for people to help understand. But basically, when you see this thin line, which is like the lower candle or the lower shadow, whatever you want to call it, these are just kind of like the lows of the day or that day in particular. But you see, they kind of follow along the 50-day moving average line. And horizontally, they kind of tap on this line a little bit around 93 and a half, around $94. So now that it's done that, it's peaked over the recent high back around June 12th right here in this area. And now it's just barely above it. So now 98 bucks might become a support line, and it could probably crack over 100. But if you look at RSI, and RSI is the relative strength index, so it's kind of basically the momentum or the direction the stock is going. And whenever it's green up here, it's high, which is above 70, which is kind of hard to see this number because it's being blocked. But whenever it's above 70, it's considered over bought. And then whenever it's below 30, which is down here in the red, which maybe I could find another stock to show you, but it's considered oversold. So when it's overbought, usually people get out and sell to drive it down. And then when it's oversold, usually people buy to get in to drive it back up, because you want to buy low, sell high. That's just the basic mentality. So right now it's kind of high. It's the highest it's ever been. Let's put it that way. But one company, again, I want to highlight and interesting is Amazon. And I watch this video on this video this YouTube channel called L2, where this guy does I think his name's Scott Galloway. He does a lot of videos on like kind of like the major tech stocks like Google, Netflix, Facebook, Amazon, Apple, other companies like that and stuff. And he does a great job, in my opinion, of rating them. You're talking about the money they make, and he keeps talking about Amazon becoming like the first $1 trillion business, which Apple is close. But Amazon just keeps making these bold moves to jump forward. And he makes a really good comparison, in my opinion, where when Facebook bought Instagram, people laughed at Zuckerberg and all that, saying it wasn't going to go anywhere, it's a bad idea. And of course, it's like has over 1 billion users and it's fucking great and everybody loves it. And now Amazon's buying Whole Foods and they're basically going to be taking the market from grocery stores, kind of like how they're already taking the market from outlet stores like clothing and stuff. Now they're going to be taking the market from food, from your grocery store. And he makes that comment because people looking at it right now like kind of attacking it, but he brings it out saying it's going to revolutionize how people get food, because you're going to get better quality food at a cheaper price and delivered to your door for pretty much free. That's how Amazon does it. They have the 2-day delivery, and you pay hardly anything for shipping. You're pretty much paying the full price of what that product is, and that's just how Amazon networks. So it's going to get better, but it's also going to displace more jobs. I mean, just keeping it real. So you're probably going to see a lot more grocery industries closing down, like you're seeing outlet stores closing down, unless they grow their online presence. That's ultimately, in my opinion, what they have to do is they have to have a really strong online presence. They have to offer exclusivity of their product to their consumers, which is going to drive people away from Amazon, because they're like, Amazon doesn't offer me 2 for 1 on this, or groups of this, or if I buy one get one, stuff like that. So they have to do something like that. But that's just me. But when I look at the growth and potential of this and other tech companies, which is why I kind of reiterate tech companies are going to continue to grow and grow and grow. But that, I just found that particular comparison. I just want to highlight that, why Amazon is just a crazy company. But anyways, that's just kind of the update on my ETFs, my stocks. And like I said, this is my 4-year portfolio, so I'm not gonna bail on these anytime soon. I am very, very, very wanting to change Wireless Wonders, or transfer it out for something else. But I want to stick with it because I want to see how this FCC ruling plays out, and I want to see how it affects data stocks, because I think that's gonna hang on tech stocks, because they kind of run together. You can't go on Facebook without a data plan. You can't stream Netflix. You can't go on YouTube. You need data. You need cloud storage. You need all that stuff. So I think they're gonna kind of collapse into each other, depending on what the FCC does, or they're gonna just continue to grow even more. And they're gonna drive up the prices so ridiculous for those tech companies, where government's gonna have to step in, and you guys are mega monopolies, and that just got to get cut out. So that's gonna kill your gains. But I mean, I think that's like 5 years away, maybe less, who knows? But that's probably gonna happen. But anyway, as always, I try to, when I make these videos, I want to make it clear, like, don't just watch my videos, watch other videos, compare this knowledge, compare what they're giving you, compare, every little story, and make the best trade for yourself. And I chose these specific ETFs because I believe that based on this administration and everything, that's like the way that the country's going to go. That's the trade deals we're focused on. That's where the money's going to be at. So far, 4 of my trades have been pretty good. 2 have been very consistent. The more recent 2, healthcare and banks, have been finally catching up. They were lagging for a little bit. I'm still waiting on oil and data stocks to continue to drop. So that's kind of where I'm at. So anyways, if you like my channel, as always, I'm trying to do more with phone apps for investing. My Sure Trader account for day trading. I know right now I'm not using Robinhood, but in the future I will be going back to it for swing trading. And I want to cover multiple ways to invest, to try to just help people get involved. You don't have to be a day trader to watch this channel and learn. You don't have to be a swing trader to watch the channel and learn. You don't have to be a long-term investor. You can learn a bunch of stuff. At some point, I have to get back into trying to do more financial obligations, like I do want to do stuff with taxes, which I know is going to be super boring. I do want to do more stuff with credit score. I do want to do more stuff with like real estate, and like talk about those markets and how understanding them better. Obviously, you making a better financial decision is ultimately going to be the whole point of it. But I have to learn first, because I don't know much about it. But I want to keep growing this channel for that purpose, to help everybody that way. That's my ultimate goal. Anyways, long ass rant. I hope you all enjoyed the video. As always, like and share, subscribe, all that help me out. It keeps me going. And I'll talk to you all in the next one. And I hope you guys enjoy the rest of your day and have a good weekend. So, later.